I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone sliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askslim.
Hi, I'm Steve Miller. Call me Slim. And this is the askslim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And we'll have lots of ideas or opportunities for you throughout the show. Stock market, well, big jump in volatility this week. It seems the Dow Jones Industrial Average, no problem moving 100, 200, or even 300 points. And it was really an odd week for the indexes. They looked like they were in free fall on some of those big declining days, but Apple really saved the day for the indexes this week. Apple having just an absolutely giant week on the upside, one we haven't seen in a long time. We'll look at that chart later on in the best of the week. There are lots of news that I think really helped Apple. First of all, their pre-sales on the iPhone 7 were very strong. They sold out. Samsung really helped in their Galaxy Note 7. Well, it catches fire. That's not a good thing. And there's reports of 26 people that have been burned and lots of property damage. So they're recalling 1 million phones or more, or they have to replace them or refund them. And that, of course, gives Apple a lift. People, switching to Apple, at least that's the thought. And then one more little piece of news is that it appears in a report that lots of very big fund managers have exited Apple, sold all or parts of their holdings in Apple, and now you get this big move to the upside. So they're not holding it, so it's like they're short. So they have to scramble too. So short covering, buying by people that are light in positions, Samsung issue, and good sales on the new iPhone 7. All of that adds up to a giant week and just a frenzy like we haven't seen in Apple. The stock moves from $103 to $116, up some 12% on the week, and that is a giant. So S&P kind of fractionally higher. It's 3% off of its all-time highs. It was 4% off of it, but then gets a bounce. We were looking for at least 5% on the downside here before election time. That may still come, but the NASDAQ jumps 100 points. Of course, that's all Apple. And that really looks like it could edge up through all-time highs. It's only a fraction from it right now. So stock market, very volatile, very choppy week, and we got to call it a shocking week with this strength in Apple and this good week in the NASDAQ. Bond market down again. That did weigh on the markets around the world at times. It's simple. Central banks have hit the wall. There's nothing left for them to do outside of some craziness that none of us have dreamed up yet. Who knows? And the bond market, under all this pressure, we do think a rally's coming. We'll talk about that in the short-term view. The dollar up on the news that the CPI was strong. That happened basically on Friday, and it had a big gain on Friday. So strong dollar that did weigh on the precious metals markets. Gold had a bad week. It was a worse week than we expected to occur. In fact, 4 out of 5 days on the downside. Some $18 it lost. I guess it's not all that bad. Silver down about 30 cents on the week. Oil, weaker demand is the news behind that, and it has a bad week to the downside. Now, this is another little kind of crazy week in the energy markets because oil down $3 on the week. That's bad. But energy's overall really mixed because there's a a big up move in gasoline going on. Now, we're short gasoline, so we don't like to see that. And we think it's just an anomaly on the upside in here. Turns out that there is a leak, a gasoline leak, and that there's pipeline work going on, and hopefully they'll fix it in the next week. At least that's what they say. But the talk is that gasoline could get shut off from the whole East Coast, and that has got the shorts really scrambling in the gasoline market as it moves up through some resistance areas. We still think it's negative, though. The Friday we saw weakness in the financials. We're going to look at the one of the bad financials on the downside when we get into the worst of the week. The Department of Justice is going after Deutsche Bank, $14 billion fine, and that's of course on the mortgage debacle. Deutsche Bank's market cap is only about $18 billion, so that's a company that could be severely in trouble if they have to pay anything like that. They have $5 billion in loan loss provisions, and that's not going to be anywhere near enough. So that stock has been taking it really badly on the downside. You know, you got to think about this again. They're all of this fines, every single bank has paid a ton of money on this mortgage debacle to the government, but the government caused it. Yeah. You know, we'll go back to the 90s, promoting all the easy money, and Clinton in the 2000s with his affordable housing, and Greenspan pumping up the markets there with these low interest rates, and they all caused this. And then they go in and they rape the banks to try to get some money because they spend too much. So I tell you what, I have no faith in the Department of Justice or in Loretta Lynch after that whole mess on the tarmac. You know what I'm talking about. Anyway, it's ridiculous. $14 billion, Deutsche Bank. Well, I don't know. Forget about it. All right, so now let's take a look at our 60-minute chart of the S&P 500. That's the ES, and take a look at what happened during the week that did move the markets. Take a look at this chart right here. You will see that on Monday, the stocks did get a very nice big bounce in there, and you can see that gray area is what happened overnight, and then the area in the white is what happened during the day, and during the day you get this big move up in here. Goldman Sachs analysts speaking like crazy, and they said that the bond rout is going to get worse, and that the bullish sentiment in stocks is really high. They're looking for 4 weeks of some declines of some serious amount on the downside. Then the Fed heads really speaking. Kashkari comes out and he says no urgency to raise, and Fed Brainerd came out. Everybody was looking for her speech, and it was super dovish. I see those 3 arrows in there. It was, she spoke, the market popped, then the market fell. You can't even see it in here because there was so much movement inside that bar. It fell way down to here, and then the market exploded again to the upside. All of this dovishness. And I don't know, Fed Brainerd, all these brainiacs there in the Fed running our country. Well, we know where they're running it to. The world markets on Tuesday narrowly mixed. Really a poor performance after this big pop, and the sellers did start to come in, and you could see selling in here during the day. Big confusion over these central banks. The IEA comes out and talks about the weaker demand in the energy markets, and Apple starts to get its big upside move. So oil moves to the downside sharply, but Apple starts to jump on this record pre-orders. That kind of holds the market in here for most of the day after an early drop. Wednesday, it was a narrow day, narrow overnight, narrow during the day. You can see that it didn't move to the downside later in the day, despite the fact that Apple was still very strong. It has its best 3 days in a row there since 2013, but oil down 2% again. That did not help the markets at all. On Thursday, it was bonds, oil, and gold all moving to the downside. Apple still having big upside move. It was just non-stop, it appears. And that really helped the market get to the upside. You can see that right in here, big upside move. A lot of economic data coming out. PPI was weaker than expected. Philly Fed, Empire State, they come out, but they were in conflicts. You can't figure out anything about that. And it's really Apple that lifted the market consistently through the whole day. Friday, well, the CPI was stronger, and that got the dollar moving to the upside. Of course, stronger CPI means they can raise rates. Higher rates attracts the dollar, so the dollar rallied, and that put some pressure on gold too on Friday. So the PPI stronger than expected, though year over year not very strong. Healthcare costs still surging. They're not going to stop surging. We got to get rid of Obamacare. Find some solution that really makes sense. So the dollar has that strong day. Intel comes out and they beat. Oracle comes out and they miss. And we get this kind of a sloppy day going on in here after the big Apple move. And Apple pulls back a little bit on the day we'll just call it a modest pullback after that giant pop. So as far as the calendar goes for the coming week, you can see the big events are going to be coming out on Wednesday. Not a lot of earnings reports. They're starting to dribble out a little bit. Here we get Lennar Tuesday morning, KBH Tuesday afternoon. Those are the home builders. Federal Express Tuesday afternoon. And Bed Bath & Beyond coming out after the close on Wednesday. But these are the big events right over here. Wednesday afternoon, the FOMC meeting. Everybody waiting to see if they will raise. If they do, it will be the first time in decades that they raise in a September meeting in an election year. Before the election, got to think that they want to keep their jobs, right? So I would guess that there is not going to be any significant increase, or maybe just some bearish talk for December, but I don't think they're going up in September. All the doves out there talking in the last week, I don't think there's a chance they raise it in September. All right, that's the opening segment for the week. We're going to be right back with the best and the worst for the week. For the best of the week, there was actually some really good gainers. The first two we're going to look at, well, they're kind of related. Last week, I think it was last week, we talked about GoPro and said that the stock actually was taking a hit. And the reason was that they said that the new Apple iPhone 7 could potentially take the place of the GoPro camera. I said I doubted that, and the pattern was really bullish. And you're going to see here in this pattern that it is actually turning up pretty nicely. Here is GoPro GPRO, and this is a inverted head and shoulders that's building in here. It's not completed yet, and we're anticipating that it will be. Here's what I like in here. This is the cycle brackets right in here, and they are the guides that show you the cycle rhythms, in other words, the rally phases and the declining phases. This rally phase goes all the way out this way. It has no more time to drop and then turns up, and you get this engulfing pattern right in over here. Analyst positive comments on this one. I have projections in here up to between $20 and $24 on the upside. You can see the inverted head and shoulders measurement and Fibonacci extensions that we put in for some of these on our chart. So become a chart subscriber and you'll be able to see all of our charts on your TOS platform. So that's a good look at a stock that is looking quite a bit better. Love that engulfing pattern that you can see right in here. That's that one. Opens lower on the week and it's going to close higher than the body on the week. Breaks out if it gets over this $17 number right over there. So it's got a ways to go, trading at $16.70. So we mentioned Apple earlier in the show. We talked about all of the reasons why it's having this big pop. Up 12% on the week. GoPro up 18, Apple up 12. So we'll look at this phase in here that we're in, and that's this rally phase that we thought had ended. Yep, I got short, and this thing, well, let's put it this way, it hurt. And big rally in here as it gets way up into this major resistance area. I would have never given it credit for that. But this is the rally phase, and you could see did really well, 12% on the week. Monster week. I mean, you have to go a long way back to find anything that looks like that. That's huge in Apple, isn't it? So right now, yes, we're looking for a retracement down around the 110 area over the next month. That isn't very much, is it, after this kind of a move? I suppose it could get down to the intermediate support zone right around 107. So those are really our targets. We don't think that this runaway is going to continue. It's really just this combination of perfect things that has Apple in this rally of the iPhone coming out at the same time. Samsung has got their issues. And all of these fund managers that probably wish they didn't get out and are probably chasing it. So this stock probably will remain on the firm side with this month out there looking like it can eventually get into some modest correction when you look at it. So, only like giving up half of what it did in the last week. Wynn Resorts gets a big pop. LVS, those are the, we look at a number of gaming stocks, but I think these are the most tradable. Wynn up 10%. LVS also up about 6% as these stocks get a big gain on hope that in China the Macau situation is turning around, and the numbers that they had really were a lot better as far as Las Vegas went in the last month. So good when you get those good revenue numbers out of the gambling towns. Man, these investors really go nuts, and they have gone nuts in here. When you get 10% gain in Wynn is pretty good. So here's that chart. This has our colored phasing in it. Anytime you're in these big red zones, there's a lot of downside risk, and you can see how it struggled in there. When you're in the big green zones, there's upside potential. We actually did not think that this one had this in it. It's pretty late in this cycle right over here. So what that says is that you probably get a little more of a dip, a pullback, similar to what we see in Apple, because these went crazy, and then another rally after that. You can see how we have it drawn in here. So we're going to look for a pullback in Wynn and in Las Vegas Sands because they have had these really big gains. So now take a look at JetBlue, JBLU. This stock up 8% on the week. This is a good pattern in here. The analysts came out and they're talking about how Zika negatively affected it, and they came out with stronger passenger traffic for the week and up 8% on the week. Now, I want you to look in here as we have these cycle rhythms, and one of the things we really like to point out after a big decline that you see here is when a basing cycle forms. That's the stair-step downward move that you can see right in here on these cycles. Right? And then the rally and it doesn't make a new low. That's actually how inverted head and shoulders are formed. And then it turns up right in here. We easily see the stock making it to $20. It's now trading at $17. So this is a good gain on the week and a good pattern. Tiffany gets a gain up about 8%. I don't love this stock. I haven't loved it. There's rumors of a major player taking a big stake in here. Now, when you get 100% return back, so this is the level here, and it makes 100% move back after a decline, that's a good pattern, even though the base is not officially built. So it gets this rally in here. We still would see it probably chopping in this area right in here. We'll call it 69 to about 76 as it goes into some sort of a sideways correction. I don't, with the retail industry the way it is, I can't see this one being an anomaly and really taking off. Can you? So that's a good week that it's had, but I doubt that it's going to be able to get much further. Alibaba, BABA, we're happy about this one. If you remember, you can go back to the July 21st video. If you're not a member, become one. We did a stock sectors video on Asian ADRs and talked about quite a number of them from different countries. Alibaba was one of our favorites, BABA, and that was on July 21st when we said it was in good shape for a rally. That was right around here, and you can see what it's done since then. So a great look in there. It's now getting up to this 127% extension. That's often a place that these things start to stall. So you can see we have the cycle rhythm drawn in as it's going to stall and then roll over and give some back. I would say if that is correct, and I would bet it would be, you get the pullback and then you get another move to the upside in here. You can see the cycle rhythms right in there. So Alibaba, we nailed this one. It still looks absolutely great. Talk about nailing them. I mean, some other stocks, I'm long Western Digital and Seagate. I've thought these were great looking stocks, and they have been going up. Here's Western Digital. This one gained 7% on the week. Positive analyst comments, and man, we've been giving those positive comments already. Here's the inverted head and shoulders forming. You could see the neckline right in here. It comes up and touches it here. The inverted head and shoulders projection is the distance between the neckline and the head from the breakout point. That's right up over here. We have a target of $76 on this stock, and it sure does look pretty good there. So that is a good one. And we would say get an opportunity to get in this one. We like it. Seagate, another one. It lagged this week versus 7% for WDC. It was only up about 2%. So maybe it's got some negative relative strength and it's going to pull back a little bit. Last stock on this best of the week is Intel, INTC. And this one's been a good one. I mean, you can see the upward rhythm in here clearly. Big cycles right in here and then smaller ones that you can see. So here's the small cycle right there, and then the small one right in here. See, that was the low right there, and then the next rally right in here as you made it here. Now, note the tail, it's rejecting in there. It really went pretty crazy. We would be, we think the market still has pullback in it, and I think these will get some pullbacks too. That would be this pattern right here, and then another rally. So you can see how our projection comes off of the cycle rhythms, and that says that Intel, some kind of a pullback is likely a buy, and that stock really still does look good. That's the best of the week, and we'll be right back with the worst. For the worst of the week, on a market that didn't give much ground, right? Indexes up, NASDAQ really strong. We didn't see much on the downside at all. Out of my 320 stocks, I only have 3 to show you, which is, a scant number of bad stocks. SunPower, this one is in plain meltdown. This group is plain crappy. One of our favorites was CSIQ, and we bailed on that one long ago. And SunPower down 18%, for solar down about 6%, CSIQ down about 7%. So this is just a bad group. And we talked about these actually on Thursday. We did a video on the whole energy group. We covered 25 different different stocks and really some significant analysis in that. You probably do want to watch that one too. So that's in our stock sectors category. We have 8 categories of videos. So here is that SunPower chart right here, and you can see this big red zone. Like I said, when there are big red zones, in other words, early breakdowns in the cycle patterns, those do give you time periods when you can get some big lengthy declines. Remember, these are weekly charts that we're looking at. So here you could see a breakdown over here. Well, you can't really see the breakdown, but it called for a decline right down to that period. You see that rally and a decline right into here, rally and an early breakdown, and then that big red zone, early breakdown, big red zone, man. So you could see, you get a feel for these cycle rhythms, and you could see trouble. This looks like it's negative way out into November, so it's all the way down from down to $7. I mean, this was a $32 stock just a couple of years ago, and what happened was that these earnings have been just absolutely drastically lowered in the whole group. It looked like they were trading at incredibly low PEs, but they were really value traps. So these earnings right over here are much, much lower, those projections, than we had seen some time ago. So people sadly got stuck in this one, and it's going to be probably a couple months before you can get any real kind of a rally in there. So SunPower down big on the week, 18%. Marathon MRO in a weakening energy group. This one's starting to roll over. You could see the way we have that drawn in there, getting into the yellow zone. It wouldn't become a red zone unless it got underneath the cycle low right over here. It's not all that far from it. And you can see that the declining period in here is out to November also. So again, some weakening patterns. I really encourage you to go look at that video that we did. And the last one we're going to look in here is Wells Fargo, WFC. Now, this is leaning on the group here on Friday. This is a huge decline for Wells Fargo. They got a scandal going on here on their sales practices. Congress has now opened an inquiry. They want to get bonus clawbacks, and man, that is a really poor break. And we also did a video on the banks just a couple of weeks ago and talked about a topping in the banks. So we didn't expect, of course, anything as negative as this, but we are in a corrective period, and you can see this goes out into mid to late October before this big down swell is over with. I'm going to switch over to the daily chart for a second in here so that you can see as it gave a little engulfing pattern right over here, and this scandal started to hit. You could see just the waterfall that went on in here. It didn't. This went so fast, the momentum pattern did not turn negative until right over here. It still would have saved you a little bit of money, but we're going to look for some potential bounces in here because this one looks cheap, but I don't think the bounces are going to really be able to hold, and that's Wells Fargo. A giant in the industry, was the biggest bank, and this one just absolutely melted. That is our worst of the week. Hang in there for our short-term view coming in just about a minute. Before we get into the short-term view for the next week, I want to let you know we're down to our last week here of our special that we're running. We have 8 categories of videos in our library, lots of things in there to learn, 250 something videos that you can have at your disposal to learn about charting and markets and so many other things about being a trader. There's also our rankings and setups, which is we take the 80 best stocks and ETFs and futures for trading and for trading options, and we do rankings in 3 different time periods. Great information there. We update that daily, and we put out daily trade setups when something really comes into where we consider to be a very favorable spot to put on a trade. So we give you all of that, and that's our level 3 membership. You can have that, try it out for a month for half price. So all you have to do is send me an email, slim@askslim.com, and let me know you want that link, and I'll send it to you, and you can give us a try for a month. So we're coming into our last week on this special, so hurry up. Let's take a look now at our short-term view. We do this every week. We look at 5 major markets, the ones that I look at and trade all the time, and take an accounting of how we did in the previous week. We're pretty much hanging in that 75-80% category, which is really astounding. We've been really good for a couple of months. And the one thing we missed in clearly, in fact, the total miss, was in the gold market. All the other markets were really good. Bond market pretty much spot on, almost caught the exact tick in the 10 years that we expected the low to come. So show you all of that and take a look at what we think is going to come in these markets in the next week. So we'll start out in the daily chart of light crude. Of course, we're only looking at daily charts because this is a short-term view. Here, something is going on in here. This decline. Now, what we had said in the last week is that we thought it would go down 3-4 days, and you could see it actually went down really for the whole week. The area that we expected it to come down to was testing a support that we don't even have in there anymore. Well, we kind of do. Right in this area here, the support zone was 44.60 to 90. Now here we are trading at 43.64 as I do the show, and this 10-day down over here is pretty significant in that we're getting some kind of a flush out in here right now. So now we're getting into this rally phase right in here for the next week. We're going to call a up week in the oil market. We expect it to get up to this minor resistance over there. I got to tell you, I've got some concern about the longer term picture in here, getting underneath this trend line. This upward trend that you see in here, I'm looking at the intermediate patterns now when I talk to you about that. This could be turning over in here, and if that's the case, then it's going to look more like this going out over here. That's a distinct possibility. So right now, we're only going to look for upticks to minor resistance areas. That takes you up to 45.25 to 45.90 into that minor resistance zone. We're going to call it an up week, not a big up week, and just testing that. The risk is that you get a rally right up over here and it fails big. We kind of don't think that'll happen, but that's really the way we have it drawn on our notes, is something like that, and get up into the resistance and then fail, not be able to hold up through there very well. Now, gold market, we had a big miss in here. What I believed that we were early in a rising phase. Now a lot of lines in here, but what I want you to focus on are these right here, the 2 blue ones pushing up. That's this rally that we got in here, and then when it started to pull down, and we got this called the rising 3 methods, the 3 bodies right here inside of the big white bar. Most of the time, even if you're going to get a continued failure, you get an attempted rally and it pops up back here to the high or higher and then rolls over. So we didn't get that at all, actually. There hasn't been hardly an uptick at all. So this was just a completely blown analysis. I missed this. And now the pattern, now see this blue one right in here, the rally and the sell-off, that kind of goes way out over here. That's this dotted line that you see. So just want to get clarity in there for our chart subscribers. That's our level 4 membership, gets all of our 400 charts. So the now we have this key cycle support way down over here. Well, it's not that far, is it? Right around 305, 306, trading 311.80. We had thought the range was 1310, 1335 over the last couple of weeks, and we just didn't call for that this week, so we missed it. And right now we're looking for 1303, 1330 as kind of a narrow range where we think that this area in here is pretty much going to hold it right there. And there's that short-term support zone right over there. But then you've got this minor resistance right over here at about 1330. If it tries to rally, I think it falls back down during this period. So that's the reason we have a narrow range in here, is because we think it might try a bounce as the dollar tries to pull back a little more. But we don't think the bounce is going to hold. So it really looks to us, here you can see this downward path right over in here in GDX. That's still pushing down. The silver pattern in here pushing down way out over here about a week longer than the GDX. So all that downward motion says to us that the rebound in here is likely not to hold, and that gold is not likely to have a very good time of it in here. So that's a look at gold. Not a good one for us last week, and the only one that we really missed. In /6E, which is the euro currency, let's take a look here. Actually, want to go out to the 2-year daily and then come back so we get all these alignments. So here's what I have in here. You can see, I don't want to go that far. Okay, so you can see in here there are 2 cycle patterns. These cycle brackets show you the pattern, and this one here, and then the broken line one in here, which is the shorter one. So if you look at the shorter one right here, you can see the rally and the sell-off, and then the rally and the sell-off makes up the bigger pattern right in here. That's these 2 cycles right in here. Now note what happened in here. You get the rally and the sell-off, and it gives up all the ground right in there. That's a lot of ground that it gave up. Right there comes down to the 61.8 of this bigger pattern. Now the next, because it came down as far, almost all the way down to where it was at the previous low, it says that the odds are that this rally right in here will be deficient. That's this one right here, and that it sells off again after that. That's this one right in here. Then here you can get to a better period right there. So it says to me that rally in here is likely to fail. So this is what we have drawn on our notes right like that. We expect it to try to get an uptick in here. The uptick should get it up to the 112.50 to 112.80 resistance area, somewhere in there, and then it likely rolls over again, and one more shot to the downside before we can get into another rising period in there. So last week we said it would test 111.30 to 50 on the downside. It gets down to about 111.90. It didn't quite get quite as far as we expected. One of the issues is that there was a roll in here, so the numbers aren't exactly the same. So if you go back and look at the old contract, it actually did make our objective. So the pattern, that's why the pattern is a little different than we showed last week, or the numbers a little different. So we're just going to look for a rally that fails here in the euro currency. Next one we're going to look at is a /ZN. That is the 10-year. And we said for the 10-year last week that we thought we saw another 3 to 5 day drop, downside risk. Even though we were looking for an intermediate bullish phase to be formed, the short-term phase looked really bad to us. That's this one right in here, and it did move to the downside. Our objective was 129.26, the low in here 129.26, 27. We were looking for 27 and hit 26. So pretty much came down to the location that we expected. Now we're getting into a rally area right here. Intermediate pattern, I'm telling you, the lengthening in here is making that intermediate pattern look weaker. While we were looking for a giant rally in the bond market, well, we've had to reconsider that right now, though we are still looking for intermediate bottom to be formed and some decent rally pretty soon. Short term, well, that's what we're looking at right now. We're expecting a rally. Our upside objective in the rally in the coming week, and we're going to call this a small week, that it has trouble following through because it's still struggling in here with central bank issues around the world, and of course the Fed coming out. So that's of course on Wednesday. So could get bigger moves in there, but right now we're going to call it trying to get up into this area of resistance on the 10-year. 130.30 is the number we're looking for. That's only 17 ticks. And on the 30-year, the upside projection is at around 167.30. So the 10-year pretty much nailed our bottom tick that we talked about last week. So we get like 2 stars on this one for sure. Really a good call. So the next thing that we're going to look at in here is the stock market. Last week for the stock market, we talked about big risk, and we were in a period where we could get some big declines. We certainly have been in a highly volatile period, and this period of big risk that we're in the market, what we're going to say right now, we're in a period of respite. In other words, it's we think it's going to calm for a little bit here before we get into the next downside wave. We thought the decline would be 5% or more in the S&P 500. It got down not quite 4% from its highs. So far, saved, like we said, by Apple and the NASDAQ. Well, we think that that's just a temporary occurrence. But in the meantime, we have a little adjustments to these cycles in here, and we've now got the S&P 500 and the Russell pretty much lining up pretty closely right in here. And then the small patterns are the ones we've been looking at. So that's these little patterns right there. That's these right in here that have been a good guide for us. And now we're in the next rally that happens to line up with these right here. It's slightly changed from where we were. The Russell is exactly where it was, but now we see this bigger cycle pattern here in the S&P 500. That gives us a sense. You could see the morning star right over here, that some more buying is going to come in before this market does roll over. In fact, we think it's possible the S&P 500 is going to edge out to a all-time high before we get the next down wave starting. So here is the S&P 500. We're going to call it a week that looks something like this right in here, where it goes up and then can't hold the rally and then comes down again. Of course, we're looking at Wednesday as a day that the markets are likely to move in a big way, and because of the FOMC, and we'll see if they don't raise, which I don't think they will. Then if they're very hawkish for December, it could cause issues for the market. If they do raise, then who even knows? I couldn't even guess then, because they could feel relief, or they could be really scared, one way or the other. And it's so hard to call these Fed days. The bias is almost always to the upside. So this is what we're really expecting this next week, is that it tries to rally a little bit more. Our target for the upside is 21.53 to 61, and then rolling over, and then all this risk coming in out over here for some much bigger downside into October. So that's where we think the riskier period is right there. So we're going to just say short term, we're in a rising phase that we don't think is going to last long. So we'll see if 21.53 to 21.61 holds it on the upside, and then it starts to roll over again. Last thing we're going to look at in here is the VIX, VIX. The VIX is lining up now with what we were talking about in the S&P 500. We've had some just huge moves here in the VIX in this last week. Last couple of weeks we saw the VIX way down at around the 14, 15 area. We saw it actually down at 12, right? And then in the last week it had this big pop way up to around 22. So take a look here as we look at just this daily chart here in the VIX, and you'll see how it lines up with what we're anticipating. A little closer look right here. And so we said probably sometime for the next week we're in a rising zone in the stock market, right? So that kind of gives you about a week's worth of chop right over here in the VIX, but then right over here and out into that October period that we're talking about, we expect another pop in there. You could see 2025 in the VIX, we think, in October, which is the period we think that the biggest selling is going to come in to the stock market. It might be that these polls keep swinging over to Trump and investors get very scared by that. That is it. That's the whole show. Talked about lots of stuff. Hope there was something in there of value for you. Don't forget, we're coming into the last week now for our special we're running, so get all of our content, everything but our charts. Really, I think you'll be astounded by how much information is in there. Half price for a month. Write to slim at askslim.com, and I'll send you the link so that you can sign up for that and give us a shot for a month. Really helps us, and helps us really keep bringing this free show that we do every single Friday to so many thousands of people out there. So take a shot, subscribe for a month. I hope you have a great weekend and a safe weekend. Like I've been saying, it is crazy out there, and we're always wishing you great trading.